checking out the charts and all of that, and this just popped up on my screen, which is the chart of the day. Euro heading toward US domination. Not quite yet. So I literally stopped everything that I was doing and switched on my recording software, and I'm going to go over this with you. So this just dropped at that time, and this is literally like 2 minutes ago. So this is as I am actually seeing this. So let's actually go over it and see what this is about. So chart of the day, euro heading towards US domination. Not quite yet. So we're gonna go over the chart. Let's just see what the content is. So the US dollar retains its hold on the position of global reserve currency for two reasons. So the reason why this article, in my opinion, is starting this way is because a lot of people have been arguing the dominance of the US dollar as the reserve currency of the world. So the most traded currency pair is the euro dollar, and there's also another term called euro dollars, which refers to US dollars outside of the US. So the euro and the US have this correlation that is very important, and it's also the most liquid pair there because they're huge trading partners. So this is why it's starting with this position, and to also understand this is to know about the China's initiative and how they want the euro to be part of the Belt and Road Initiative. So how that is going to shape out is going to determine a lot of things in terms of currency appreciation, depreciation, and in particular the US dollar and the yuan. So for starters, the US is considered the most financially stable country in the world, thanks to its political system and military might. As well, it's still the world's largest manufacturer and was for many decades also the biggest global exporter. And as I've already gone over this fact, it depends with how you look at it, but China is already on top in terms of GDP, triple P, which I have a video on, so you can go and look at the different economies of the countries and their different GDPs. And I go over this fact, how China is already number one. So in terms of purchasing power parity, China is already number one. But as the world wakes up to what's actually happening, we're going to see that in real terms, GDP, China is going to be number one very, very soon. And some projections put it around 2025. I think it will be around 2030, thereabout. But we can go into that later on. So for many decades, also the biggest global exporter. All right. So there's a lot of demand for the US dollar since they're the biggest exporter, because they're paid in US dollars. So everyone has to change their money in US dollars because they're exporting a lot. But China is also a large exporter, so this could change. So however, in 2017, China became the world's largest exporter, and Germany is now not that far behind the US on this measure. Okay, so in 2017, China was already the largest exporter. All right, so here, excuse me. So the US is the largest manufacturer and was for many decades the largest exporter. So it's still the largest manufacturer, and it demands its payments in US dollars. So this gives a huge demand on the US dollar desirability. And in 2017, China was now the largest exporter. So there's now a huge demand for yuans, so which has actually been appreciating for a long time. In fact, let's just pop up a chart of the yuan. All right, so here we go. So this is the monthly chart. So this is the yuan. All right, so this is China, and there was a strong appreciation of the yuan in 2017, but then all throughout China has been basically a weaker currency. So this is what Trump didn't really enjoy, and this is why he was calling China a currency manipulator, because of this parabolic uptrend that you see over here. So this is a very, very, very strong uptrend, and we were downtrend for a little bit and a little bit here, but generally it's an uptrend, which means that Chinese goods are cheap, and this is also contributing to our triple P parity. However, in the past couple of months, we see like now there's a double top here. So we're gonna see what's gonna happen in terms of what this looks like, because this is looking very rather appetizing, interesting, and fascinating. So I'm just gonna be watching this. But for a fact, I do know that this is moving down. This is moving down, probably around 6. Because when so we'll see about that. But then for now, let's just continue. So the largest exporter. So their exports are very cheap, and it's the largest exporter. So we'll see how powerful or weak the US dollar will be, which will still determine how powerful and weak the Chinese will be in relative terms. But let's carry on. And Germany is not that far behind, and Germany is important for the eurozone. This is the largest economy after Britain left. So Germany is now not that far behind the United States on this measure, all of which diminishes the need for such a high global quota for reserve dollars. So you see, this is why the domination of the US dollar is being put into question. So this will diminish the need for such a high global quota for US dollars in favor of the euro and the yuan. So let's see what that means. And as we can already see, in the next couple of months, we might be seeing some downward movement. And mind you, this is something that I've already been meditating on, and this article just popped up. I'm reading it for the first time as you're seeing it. So, however, yes. To that effect, in 2018, China launched oil futures contracts dominated in yuan. Oil. And we know what happened to oil in the past couple of weeks. The oil contracts went sub-zero. They were dominated in yuan, in part to try and replace the US dollar's currency reserve domination. So if you're looking for a reason why the trade war is happening, why everything is happening, follow the money. And you're going to see that this whole trade war and all of the things that are happening is because it's challenging the US dollar and its supremacy. And each country that has had supremacy, each country's currency that has had supremacy over all other currencies was always the leading and dominating power and force. So when we look in the previous century, it was the pound that was the most powerful, right? And in this century, or in the last right now we're in the 21st century. So when we look at the 19th century, it was the pound that was powerful. When we look at the 20th century, it was the US dollar that was powerful. And as we move on to the 21st and 31st century, the yuan is going to be the most powerful. And this is my outlook. So for that matter, Germany's economics, what else did I want to say? So yes, so oil is linked to the US dollar, right? So when we look at oil, what we're looking at is the blood of the American economy. So when this is dominated in yuan, the life is in the blood. So this is why it's not pretty. All right, it's not pretty. So for that matter, Germany's economic strength could end up powering the Eurozone's single currency. So Germany is going to be very, very, very important in the next coming week. So I guess we should zero in on it. And economic strength and end up powering the Eurozone's single currency to reserve status in place of the greenback if current political instability in the US worsens or the Trump administration's propensity for trade wars escalates. I like the way that they say this, propensity for trade wars escalates, perhaps acting as a catalyst for a global restructuring of commerce. So yes, so of course, this is what's up. So it's also interesting to look at the Eurozone. Now, the Eurozone is very important in this day and age. Right now, this would be much better if this was a live video and there were like 100 people, right? And then we could all just actually chime in and build together. So I guess we should work towards that, So like and share this video so that we can increase in numbers while we multiply the money. So here Trump's administration's propensity for trade wars escalates, perhaps acting as a catalyst for a global restructuring of commerce. All right. So the eurozone is important. Christine Lagarde is now the president since last year in November. So she's just got in. So there's gonna be a little bit of restructuring in the eurozone, which Christine Lagarde is. In fact, let's actually just search her right now. Let's actually search her. If you're not sure who Christine Lagarde is, we have to really. Okay, my R doesn't work when I'm recording because it's working in the recording. So yes, this is the yuan, and the past couple of weeks it's been falling like crazy. Okay, so here we go. So Christine Madeleine Odette Lagarde is a French politician and lawyer, serving as president of the European Central Bank since November 2019. So she's new. Before this, it was Mario Draghi. Between July 2011 and November 2019, she served as the chair and managing director of the International Monetary Fund. She was the brass at the IMF. Now she's the brass at the ECB. All right, so she is a shark. She's a big deal. So people view her transition as a promotion. So Lagarde previously held various senior ministerial posts in the government of France. And France, this is, if I'm not mistaken, the 5th largest exporter in the world. France is a powerhouse, of course, one of the biggest economies, and one of the, France is, So she was a minister in France, and then she was the first female managing director of the IMF for quite a long time. And now she is the first female ECB bank boss, the president. So yes. So she is pretty impressive in her credentials in this matter. She was a Minister of the Economy, Finance and Industry, Minister of Agriculture and Fishing, and Minister of Commerce. Lagarde was the first woman to become Finance Minister of a G8 economy, and is the first woman to head each the ECB and the IMF. So watch this woman, because especially in this day and age where this whole sentiment of equality, female empowerment, I wonder how this sentiment is going to play into the perception or the reflexivity of the ECB, the euro, and how this is going to translate into real terms in the real economy where we make real dollars. So this is Christine Lagarde, if you didn't know her, a noted antitrust and labor lawyer. You check out her credentials. Very, very interesting. And antitrust is anti-Jeff Bezos type of stuff, which is anti-monopoly, right? And anti-labor. You know, the reason why I'm really going over this is because I see the way that the press reporters treat Jerome Powell, and I see the way that they treat Christine Lagarde. It is a world of difference, and you have to notice certain things as a trader, you know. So this is something interesting, and it actually reminds me, I was watching Billions the other day, and I think it's episode 4, season 5, and Taylor is looking at this president of a university who wants to diversify their portfolio, and what he's actually doing, he's actually reading his body language to see that he's saying that he doesn't want to do it, but he actually wants to do it, and then he makes money out of that. So yeah, it just popped into my mind that scene was in that movie which is basically what's happening. So Lagarde was the first female chair of major international law firm Baker and McKenzie between 1999 and 2004. In 16 November 2009, the Financial Times ranked her the best finance minister in the eurozone. On 5th July 2011, Lagarde replaced Dominic Strauss-Kahn as managing director of the IMF for a 5-year term. So this is her. So political party Union for a Popular Movement, POP. She's very popular. The Republicans. Other political affiliations: Europeans People's Party. Sounds like the People's Republic Party, you know. Spouses: Wilfrid Lagarde, Akron Gilmore. Domestic partner: Xavier Guionsanti, 2 children. Paris Nanterre University. Sciences: Paul Aikes. Vice President: Louis de Guindos, preceded by Mario Draghi. Anyway, yes, so watch the eurozone. That is the the point of that. So anyhow, so for that matter, Germany's economic strength could end up powering the eurozone's single currency to reserve status. So she's part of the reserve bank. So let's see what the reserve does. So reserve status in place of the greenback if current political instability in the US worsens. But then I don't think the euro could be the reserve currency for so many different reasons. But I think they will front it as something like that. But I don't think it will be. Because the US, UK, it's the same thing. US, UK, EU, it's the same thing. So the West and the East, and you know, so I think it's gonna be the same thing, which is centralized around oil. And oil in itself is gonna be carbon. Alright. So we'll get into those trades later, the carbon trades later. If current political instability in the US worsens, or the Trump administration's propensity, yes. It is possible too that since the Fed's unprecedented money printing is, well, unprecedented, it increases the risk of a financial meltdown as people lose trust in a system that relies solely on trust rather than gold, as has been the case since 1971 when Nixon abandoned the gold standard. Yes, true. So since 1971, this is when currency trading actually was birthed. So through this, what we're actually doing is looking at everything in relation to gold. So this is why gold is right now the only trade that really matters. And what happens to gold affects silver. And in my opinion, silver is the trade that really matters. So this is like zero. This is like, you know how they like have the 1%, but there's the 1% of the 1%. So I believe that silver right now is gonna be like, yeah, silver is what really matters in relation to gold. But gold is the director of all things that are happening within an economy, not even oil. Oil is superficial. And since 1971, all these wars and things were done in the name of oil. In fact, since the 30s. But since the 30s, this is when they suspended the convertibility. In 1971, they suspended the entire convertibility of gold. In the 30s, when they started using oil, they discovered that they couldn't keep up. So they had a gold-based currency since the 1930s. But then in the 1930s, Teddy Roosevelt said that everyone in the States had to give up their gold. So their gold was taken away in the 30s. But then it only made it in the 1971 areas. That's when the gold standard was completely abolished. Then before that, they had they had a gold. I'm like, it's at the tip of my tongue. I'm forgetting the word. Yeah, they had the gold standard and another standard. So this was actually a 2-step process, but it's all based on gold in relation to oil and other commodities. So whatever happens to gold happens to other commodities as well. Or actually, gold is like, you know, it's gold. Come on, it's gold. But anyway, in relation to the currencies, it's going to be interesting. So, oh yeah, and one other thing, right? So we're going to be looking at the eurozone, right? And this is really key. We're going to be looking at the eurozone, but then we're going to be looking at it in relation to cryptocurrencies. So when they are talking about a single currency to reserve status in place of the greenback, as I said, they're gonna front it like it is still the US or the EU, but it's gonna be something totally different. And in the eurozone is gonna come through the crypto based, which is something like a stable coin. Maybe they'll even link it to gold and things like that. But we're going to be looking keenly at more information as we are investigating in our investments. Right now, though, the dollar still dominates. Yes. So if we're now trading in 2020, at this very moment, the dollar is still dominant. So let's not look too far in the future. Let's not look too far in the past, but let's always be right now current as currency traders. You have to be current now, but you have to know. All right. So even from a technical perspective, if there's a battle between the euro and the dollar, the long-term charts favor the US dollar. So this is where we're at. So this is how they are seeing it. So now this is the chart of the day. Euro heading towards the US domination. Not quite yet. Dun, da, da, dum. So this is what I actually came here for. You know, I like the art on the charts. Chart art. So this is the euro dollar. And we're in a very strong downtrend. It's actually a channel, as they've put it. I've made a video on different ways of looking at this, and I've seen the biggest pattern I've ever seen ever. But as of now, right now, we might see that the currency is at 1.13555 at the time that they made that. Let's see what's happening on the chart right now. 136.63. All right. So as it's moving, it's actually showing us that the euro is strong at the moment, but the trend is down in general. So the trend is down right now, and we'll see how this is going to be as the price approaches the 150 area. So maybe we'll see a really big bounce here and the dollar will be stronger again, which is more likely. In the video called Hitman Trades, I speak about this particular scenario that's unfolding right now. So we're gonna see what's gonna happen there, but that's basically what it looks like. And here, this is monthly. All right, we're looking at weekly. Let's go to the monthly. So the way that they drew it, if I was looking at their drawing, it's something like this. Yes, I mean, not gonna draw them like as perfectly as they did. And then, well, for them it's actually a channel. So all right, there we go. Now, in fact, I'm just gonna drag this, make doubly sure straight. All right, so I think it's something to this effect that they've drawn. Let me just get rid of these. And I want us to see it with our own eyes. Okay, with our own eyes. So this is what it's looking like. Okay. And this is what it's looking like. Oh yeah, I forgot the underline here. Alright. So basically, you know, I didn't get it quite as to the dot as they did. But this is my, you know, best rendition of what they're doing here. Not best maybe, but yeah. Oh yeah, yeah. In fact, I wanted to connect this to that. Yes, so this is a very, not very, but this is quite a solid base here, where support has come once, twice, thrice, 4 times. It's bouncing back up. So there is some support, some strength in the euro, as we can see right now. And we'll see how far it goes if it actually tests this trend line. But before it does that, it might come back here, and we'll see what it does here. And we'll see if the dollar is really strong. If the dollar is really strong, it has to break this barrier and come all the way down here. All the way down here. So we'll see how strong the dollar is. But this trade basically is fundamentally based. If you're going to be taking a trade like this with knowledge, it would be best to do it on a fundamental basis. And this is like a move like the ones you see from here to there, like 3,000 pips, you know. So you're just correct every single day for 3,000 pips. So with 3,000, if you are good at compounding, you'll be able to make quite a substantial amount. So this is what we're going to be looking for. But in any case, when we go down to the weekly level, we'll see that there is alright, this is daily. Alright, weekly. We see that there is an abundance of opportunities just on this time frame because of where the price is. So right now it is peaking up. It's been going up for weeks. It's due for a retrace, maybe up here, maybe down there. This is just a technical trade basically. And if we look at what the eurozone is going to be doing and things like that, then we can make even a more refined outlook on which direction the price is likely to go. All right, so this is what I'm seeing. So let's see their commentary in relation to this. Okay. All right, so the euro dollar topped out in December 2014. Okay. So we're talking about somewhere here. This is the top they're talking about. When the pair fell below the monthly 200 moving average, which was the neckline of a massive head and shoulders top. Since then it has been trading with a falling channel since the 2008 high. Once again, the currency pair looks to be forming a head and shoulders continuation pattern, which would be complete with a fall below 1.05. Meanwhile, however, the euro is said to continue rising in the short to medium term. Okay, so this is, so what is this? Alright, let's see. This is a daily chart. I want to map out the head and shoulders. So this is what head, oh yes, of course. This is a shoulder. This is a huge shoulder in the head, moving up, and they're saying that it could come back to it could fall below the 105 area, which is near to the area I was talking about, 1.05, somewhere here. So let's see again what they said about that area. Just want to make sure. All right, once again, the currency pair looks to be forming, which would be complete with a fall below 105. All right, so let's see. So this is also another, all right, so this is actually what they're talking about. So this is a shoulder, this is a head, this is another shoulder, which could come and fall below this area, 1.05. Bam. So we'll see how this area goes. So this area is a real testing ground, 105, which I was saying could be around these lows. Okay, so in the medium term, it is looking very bullish. Let's see if they have any projections. The single currency is climbing for a third day after a 1-day interruption to an 8-day moving streak. Its longest since April 2011. So it hasn't moved this way since this day, since this month. However, such a strong rally is almost certain. Look at this. There's a great conviction is almost certain to be followed by profit taking. Okay, so you're hearing what they're talking about, right? Especially ahead of the resistance of the March 9 highs. All right, let's just make sure we get what they're talking about. March 9. April. So just right here. March 10. So let's say right here. So this is what they're talking about, the March 9 high. Great. So this is 1455, which is interesting, but I was looking at this 150 level because it just has this psychological ring to it. So this is the March 9 high. So we'll see what happens at this area, which is where we are expecting with quite high certitude that there'll be a reverse. All right, so this is what they're also expecting. Okay, that there's a strong rally followed by profit taking, especially ahead of resistance of March 9 highs. Therefore, when we note the downward slope that connects the highs reached on Tuesday and Friday, we expect the price to develop. So this development would take a while. A falling flag, that's the pattern that develops when earlier bulls want to lock in gains. Okay, thanks for the tip, bruh. As new bulls arrive to pick up the load for an unexpected next move. So there's gonna be a fake out. In other words, new bulls will come and try to get in on the action, but they'll always come when people are leaving, or when the smart money is leaving at least. So yes, so patience would be good. At the same time, depending on your time frame, you can see how this price and your skill, your tact, because I actually had a bad experience because I was trading and I knew that price was going to a certain level, right? Like for example, like the price would be like somewhere like, you know, let me show you what happened to me. So the price could be like somewhere like here, right? And then it comes back here, and then I know that, all right, the price has to come back and retest and do whatever it does because of this candle or something. So then I entered this huge trade, but then I was spiked out so many times that like a candle like this will come and spike you out when you know that it's gonna beat the uptrend here. So you enter your trade somewhere like here, and then the price just smacks you, and then it comes exactly where you want it to be. So you should avoid that by being patient and waiting for the best entries. So this is the March 9 high that we are keenly observing. So it's up to you what you do while you wait. Yes, I'll put it that way. It's up to you what you do while you wait. All right. When we note the downward slope that connects the highs reached on Tuesday and Friday, we expect the price to develop a falling flag. All right. So we'll see what will happen. Sure enough, even as we were writing this post, the price fluctuated, at times giving up session highs, forming an intraday shooting star. That's a bearish candle upon a close, but it's more reliable when combined with a downtrend line of recent highs. Okay, that supports the scenario of a falling flag developing. If today's Fed speak keeps focusing on accommodation, it could be the catalyst for another dollar sell-off. All right, so this all right, this is the economic calendar today, and all right, so this is the date, this is the time, this is my time zone. So these are the things that have been happening, and core CPI to be announced very, very soon. But later on tonight, we're gonna have some Fed speak right here. So there might be a move later on. So this is why I just use the economic calendar, you know, because yeah, there's like that other calendar which really doesn't affect the markets, and there's this calendar and news that affects the markets. Anyway, keeps focusing on accommodation. So let's see, accommodation. Yeah, so this is when I would need you to like chip in to help me understand what it's talking about here. And yeah, so we should really go live with these videos and speak at the same time. So yeah, you know what to do. So accommodation to me actually means that like the Fed is waiting for the economy to recover, and they're going to accommodate unemployment by giving them stimulus checks, not packages. Yeah. So I guess that could be it. So if that happens, the dollar will lose value because it's just so much of it that's being printed. We also understand there needs to be a period in which the euro traders tackle the March 9 highs. So don't lose track. Don't lose track. We also understand there needs to be a period in which the euro traders tackle the March 9 high. So I am basically a euro trader because I focus mainly on the euro, especially on this channel. I do look at all of the other things that move, but generally I would say I'm a euro trader for now until I develop a rhythm with other things that I have with the euro. So for me to understand like everything else, it will be through this spectrum, through this whatchamacallit, I'm looking for a certain word that's escaping me. Tackle the March 9 high. So yeah, just hold on to this area, 150. It's gonna be very important. So this is likely leading to a pullback at the very least. Okay, a pullback at the very least. And in the video about the hitman trades, I really don't think it's just a pullback. Maybe, maybe not. Who knows? This is trading. Momentum indicators are also the most overbought since the March 9 highs and falling, signaling that pullback. Full stop. The slower lagging MACD is the most overbought since January 2018 and is turning around. And I'm not going to go into indicators. Trading strategies. Conservative traders would commit to a long position after an upside breakout. Conservative, all right. Commit to a long after an upside breakout of a minimum of 5 session range, followed by a successful support retest on top of the pattern. Moderate traders will wait for the breakout, followed by the return move as well for the better entry, though not necessarily for proof of trend. Aggressive traders may enter a contrarian short, counting on a return towards the flag bottom as overbought conditions settle. Okay, so yeah, that's that. So trade sample contrarian aggressive short position. So entry at 113.55, stop loss 137, 20 pip risk, target 1275, 80 pips. All right, so 1355. Let's see what this would look like. Just gonna clean this up generally. All right, let's go to the hourly chart. 1355. Okay, so this is our entry and I'm gonna make it green. Okay, stop loss 1375. One three 75. So this is our stop loss, and I'm gonna make it red and 1275. All right, 1275, somewhere around here. So this is our take profit, and I'm gonna make it blue, steel blue. Yeah, love it. All right, so basically they just lost us money. But then yeah, I got it. So this trade is based on this area here of previous resistance and having that like turn, you know. So right now the price is spiking above the 38 area, but at the same time we've already gone over the fact that this area, the March 9 highs, have got to be tested. So this might be an issue where the price is alright, cool, we're not strong enough to like make it here, so we're just gonna go back. Resistance is strong, the force is strong with this. But from the price action here, I'm seeing that there's a lot of steam that is still being built up with only one red candle in all of this move. In fact, I was short on this trade that they're talking about, but I was short a long time ago. That I actually changed all of my positions. I'm actually a bit long. I still have some traps in the meadows. So I definitely understand their trade, and I also agree with it. As a matter of fact, this candle was the best catalyst for such a trade, and right now this is looking super bullish. As a matter of fact, I might actually wait for other long positions as I get off this video. We'll see, but for now I'm not seeing anything, as I'm only seeing the long opportunities. Okay, what's this now? Alright, that's my so 20 pips lost, but was supposed to make 80 pips. So a trade like this, okay, so let's assume this was correct. So 80 pips, not bad, right? So if you enter here, this is actually 100 pips. So a very, very conservative estimate. 900, yeah, 100 pips basically from there to there. So cool. So yes. So I don't know if we're gonna leave a comment or not, but I do appreciate this article. Let's see who wrote it. So this is just by investing.com. Pinkaz Cohen. Oh yeah, no, this is Madame Lagarde. Alright, so it's taking me here. Anyway, don't worry about that. I'm sure he's on here somewhere. But then usually these articles have certain writers who are focused on a certain pair or commodity or something like that. So no worries. But then I think this is a very, very, very strong one. Chart of the day, euro heading towards US domination, not quite yet. So now we have a more clearer understanding of what this is about. So thank you so much for spending this time with me and learning, reading this with me. I know that I went like all over the place reading it, but through that I guess I got a more holistic understanding. So thank you for also sticking through that. So see you soon.